We already have Netflix results. We're going to go to Julia Boorstin now for those. Julia.
Yes, we have a beat in terms of revenue. The company reporting $8.83 billion in revenue ahead of the $8.71 billion in revenue expected. Earnings per share coming in lower than anticipated at $2.11 versus the $2.22 that analysts have been looking for. But the stock is higher in after-hours trading because of the net subscriber additions. 13 million in net adds. The company had been expected to add about 9 million, just under 9 million new subscribers, but instead it reported 13.12 million. We will be digging through the numbers and back to you with more.
Okay, Julia Boorstin, we'll keep our eye out. In the meantime, let's bring in our market panel. Joining us now is Vital Knowledge founder Adam Crisafulli and CNBC senior markets commentator Mike Santoli. I was going to start, Adam, with the record closes we just got, but now I'm going to start with Netflix and the fact that that stock is surging right now as we get the print here. What does it tell us about the stage that is now set for the big cap tech names that we know have led the rally for the better part of a year?
Yeah, so this is, on the surface for the quarter, it looks very healthy. That's a huge subscriber number. Obviously, it's going to be a lot of detail within the print on a whole host of subjects, including the end of the strike and how that impacted cash flow. The outlook into next year, live sports with that big wrestling deal they announced today, password sharing, the new advertising initiative. So a lot of moving pieces to dissect. But on the surface, it's another very strong report. Remember, the tech season really kicked off last week with that big Taiwan semi report and then the super micro upside for the announcement. So now this is the latest name out of tech. Tech's obviously the most important sector in the market from a weighting perspective.
Okay.
And, this is the first name. We'll see how the rest come in, but this is a great start.
Hang tight there. We also got Texas Instruments earnings out. Christina Parks-Nevelis has them. Christina.
Yeah, we're seeing earnings per share of $1.49, which is a 2-cent beat on revenues, though, for Q4 of $4.08 billion. So that is slightly less than what the street anticipated. But you're seeing the negative reaction in the stock right now because of the Q1 guidance. EPS for Q1 as well as Q1 revenue are both light. So that is causing the 2% drop in this stock at the moment. Guys?
All right, Christina, thank you. Mike Santoli, go to you with this before going back to Adam. I mean, a 2%, 2.5% drop in Texan, not great, but it's been up quite a bit lately. Yeah. That doesn't take it down too far, considering where it's been.
No, and obviously that's also just the first Twitch reaction. You see how it goes, whether it deepens from here or if they're able to reassure that maybe the light guidance in the current quarter is just more or less going to be made up. It's deferred. It's not really demand that's gone away. So we'll see how it does play. But, it does represent a little bit of a high hurdle because of the aggressiveness of the gains in Texas Instruments. It was not in an advantage spot within the industry in terms of its end markets, people trying to make the bet that it was on the turn, and therefore the stock gets up to these levels. So, yeah, see how it plays once they have the call.
Adam, if I just zoom out and look at what we're seeing so far in earnings season, I realize we're still in early innings, but it's been a very mixed picture. That was the case in terms of the results we got this morning across a variety of industries, and it's the case even just when you look at the screen right now with Netflix higher and Texas Instruments lower. What does it tell us?
Yeah, absolutely. We're done with banks, so we have a good sense of how the financials perform, but we're really not just getting into the non-bank earnings season. The first big ones, like go back to last week with Taiwan Semi, and then this morning you had, Verizon was positive, Procter & Gamble was well received. We have Netflix, so we're just now getting into the non-bank earnings season. We'll have to see how everything unfolds, but I think as far as the broader market's concerned, the big critical takeaway will be if the full year estimate can hold in at around $240, $245 for the S&P for this year, and I think so far the takeaway is that it can. There are nuances from each report that disappoint people. With D.R. Horton this morning on margins for home building fell short of expectations. So there are definitely going to be specifics around each report that could disappoint. But I think for the broader S&P, the earnings picture is holding steady for the year as far as the expectations.
Okay, devil's in the details. Speaking of more details, Julia Boorstin has more for us regarding Netflix. Julia.
Yes, we have some guidance here. The company says it sees its first quarter revenues at $9.24 billion versus the $9.3 billion estimated. So that's a bit lighter than expectations. But the company is guiding to earnings per share of $4.49 ahead of the $4.10 estimated. I also just want to point out here some key commentary in the earnings, the letter to shareholders. And they say it's logical to expect further consolidation particularly among companies with large and declining linear networks. But they say we are not interested in acquiring linear assets. And they say, nor do we believe that further M&A among traditional entertainment companies will materially change the competitive environment, given all the consolidation that's already happened here. So very clearly saying they're not going to be playing in all this M&A conversation that's been happening. And then they do say that since they don't give actual guidance when it comes to subscribers anymore, they do say that they expect paid net additions to be down sequentially due to some of this typical seasonality, as well as some likely pull forward from the strong Q4 performance. So that big outperformance in the Q4 subscribers, they're warning that that's not going to be continuing into the first quarter. They do say that the Q1 net adds, though, will be up versus Q1 of 2023. That was a very low number of just 1.8 million. So such a different story here, John and Morgan, in the 13 million range versus less than 2 million in the year ago quarter for Q1.